So we can put fibs on the big bottom here and take a look at those ones. We're almost at a 261 from that big B point up there. This is another 261 where the risk reward is pretty decent on being able to get to the 188, but I mean, small pops are easily managed off of levels like this. It's almost like there's another blue line in here that we could get to as well, like deja vu. That's that secondary interesting spot to go for. It's the first test of the 261 there. In a way, this reminds me of the day that we went like this, spike, and then chop, and then spike again on the other side of the spectrum. Like these levels down here are associated with this one all the way up here. Of course, there's no way that we will ever be able to get to that level unless we break this line, you know, and to that final line all the way up here, which I guess could be red yellow as well. So we've slipped through the 261 to hit 25,000. I do question that the full distance that we've made in here being the full distance that we've made down here. We've already done that, really. This distance is definitely more than happened. The next thing that there is on a chart is a red zone and a blue-white line. The blue and white line and the red zone are what's in play right now. I know red zones have been pretty bouncy lately, but the blue and white line is definitely something that we've been using for quite a while. This is elongated to the downside now more so than what it came from on the upside. But it doesn't change the fact that everything that we've done out of this spike is likely to be taken back to where the chop began, regardless of its size. So like, you know, pretty much seeing this level is like a cutoff point where we start that chop. And the ATR is actually really high on this move if you think about it, like 30. It hasn't been declining, it's been increasing. Yeah, ultimately, like this trend line right here is the one that I'm thinking that we're gonna break, like, to be the most attractive for the trend break. Because when we get above that pink line on the daily, you know, it could literally get us to the all-time high after we get through it, because that's what it's supposed to do in the Wyckoff. And in the short term, like the reset point will be that blue line like we saw in the past. It's went like 100 points past it pretty much, you know, which is kind of crazy. In just that little area, to be able to make 100 points in 4 candles or whatever, it's very important to not trade so heavy size on days like today where there's a higher ATR, which makes it a little bit more tricky as it involves patience to catch it and the discipline not to over leverage. We just made another 3 drives pattern on the short term right around the blue and white line. You know, we know that blue lines have been associated with the means lately, and this one could easily be as well. Also, the red zone's been very, very bouncy lately, as we've seen with other ranges in the past. And this range that we're on right now, the red zone that we're on, is actually the 127. Remember when we were talking about the 61 and I was like, oh, it broke the 61. We know that it can go all the way down to the 127, 141 areas. So, you know, and still come all the way back up to the 61. Beautiful movement right up off the 3rd drive. Beautiful movement right back to the blue and white line almost, where it comes down to like, okay, it's basically obvious now, you know, we're doing the 3 drives down, we've got the 127, and we know that the mean is the blue and white line, and then obviously like it's like that's the short-term target, and then you've got all the way up at the 61, 321 points away is where it could end up reversing. But even just to get to the blue and white line was 56 points and 322 total points to get all the way up to the 61 from the 127. And we talked about that earlier when we were crossing through the 61. I could make a video on it. Now it's going through it. So like with this right now, you want to put your stop and profit and, you know, manage the trade, not be on the fence about just cutting the whole thing. If you cut the whole thing, you could really be beating yourself up about it. It could be over $700 per contract that you're throwing away for 100, you know. You know, instead of selling it, just move your fucking stop up. You know what I mean? That's it. Just be like, okay, you know, I've secured more profit. Now can I stop feeling the need to like ruin the trade for myself. Like, you know, like that's the idea, you know. And to be conscious of it's not bad. But if you cap your risk and make it so that the trade cannot become a losing one and that you've already taken off, instead of leaving one contract to run, try just taking off one contract, leaving the rest to run with a stop in profit. See what happens then. Here we are at the blue line, which is a respectable place to take one off as well. It is true. Everything that was sold off past the 261 being bought back up to it. Everything that was sold off past the blue line being bought back up to it. There is a B point up there. That's the biggest, baddest B point, right? Like there's no other B point that's bigger and badder than that one, right? So we've got that up there. We know that the 261 is where, you know, that typically would reverse to. We've got everything past the 261 being bought back up to it now. And effectively what that means is that everything that we've done has come up from the 127 and cracked through the 100 now. And typically when we crack through that 100, it's a journey that takes us up to that 61. And if we get to that 61, look at how close it is to that big bad B point up there. It's so close. What are the odds we don't carry on to that? The one thing that I am most concerned with is when we achieve the point that I have an arrow here, the green zone, that could work as a point like a Wyckoff, where the initial movement, like this here, has been taken back and could say, hey, that's where we're at with that, where we're making a spike where we could have a spring with it. And that's normal when we do that. So when we achieve, you know, the fact that we've taken back this entire spike, right? There could be a pullback that could be as strong as a 78% retracement on this entire upwards move prior to continuing through the red yellow line break. So we really want to keep in mind that that's like it's not drawn to scale, but like this here could be a problem, you know, needing to come back down like that first. A movement just like that, a big one. That is big, right? So, and we can see that it would cut through the 61. And sure, you know, like making that movement in general at this low would make a lot of sense. So I am concerned with, you know, getting above a level a certain distance away so that we can be able to pull back to it. Like if we leave little B points in here that need to get tested, like this guy right here, you know, it means that anytime you drag a stop on top of that level, you know, no matter how far we go up, like we could still come back and hit that level in the future like this, and it would look like phase A. Tell me it wouldn't, right? So that's a problem. You know, if you don't see it in advance, we want to make sure that we don't get knocked out by it trying to just service this B point, right? Because like it's very likely that it happens. And the messed up part is if I put fibs on there and I look at where the 261 is, I bet you it's right up there too. Yeah, look at where the 261 is, guys. That's ridiculous. It's right here. Oh shit. Right here. 261, right where my arrow points. So in the event that we went all the way up, right, and hit that level, it would be normal for it to come back to here. And it, by default, that would look like phase A. And it would also give us another trend like this, and we would want to break that trend. But, you know, those are the concerns that I have with the journey on the way up, making some sort of need to come back to this B point. The thing that's a problem with it is when we get all the way up there, like imagine, where will the 61 be? Like, let me just draw this in, and it's another eye opener. Like right there, the 61 would literally be the B point. So in the event that we got up there and made a 61, that would be that movement, and it would get the B point. So I'm like, okay. Regardless of how many times we hit the stupid B point now, there's still a chance that we come back from a later distance that's actually quite great of a distance away. You know, like that's like 100 points away. Well, that's important actually. We'll leave that on there. So we'll do this too. What does that look like? Is there a little reminder, like a reminder of how this little B point right here is this little B point right here. I'm like, okay, this is open. Never has it ever. Unless you count that little green wick right there. I didn't count that though. Could be at the brink of a breakout too. We gotta watch out for explosive movements through old ranges and such. A lot of people will be thinking about it making a new low, but the institutions could be up to a completely different plan to what people are interested in. A lot of people have like ironed in that today has to be a bearish day, and I'm not actually feeling that. There's a lot of points on the table today to be made. We'd have to break the red yellow line to get to the B point. And we could even come back to that chopped high too. I mean, it's not too hard.